Hey guys, took a small L today. Wanted to go over it on live because I think there's a lot of things that you can take away here that I learned personally today. So let's kind of go through it. So first, what was my initial play? So I was looking for longs today towards our data high, which wasn't horrible analysis, and I can understand why I was thinking that, but it wasn't the correct analysis clearly. So what I kind of should have done was just go through my model. Like, what am I looking for? I was too stuck up in like what I was seeing and what was happening, and not what am I supposed to be looking for. So going into it, I longed like around here. I don't know, my executions are bugging out, but longed off a 1 minute inversion, which also I don't take 1 minute inversions. I should have never even considered that as a factor of our play. And I was also kind of like rushing the entry a little bit. All just like this little stuff, right? That I'm acknowledging. Nothing overgrain. Take all of this with like a grain of salt. Like not like, oh, I'm about to wake up out of bed, take a trade. No, it was more like just these small details that made the bigger picture that essentially made the small loss today. I did have great risk management. Did not like enter in any other trades, which is what you're supposed to do. All right, and when you have a profitable model, like it's going to present itself again, and it did present itself today. I understood that we had short time market open, and that I should have looked for a continuation variant of that play because my shorts were playing out that attested to my model. But I kind of want to go through like this whole trade and the whole right way I should have went about it, because I'm not like a shoulda coulda woulda guy. I know like what already happened has happened, but you still want to do your reanalysis to understand how you could have did better today. So I'm on the 5 minute right now, and what are we looking for? And this is why I should kind of be going throughout my head. What are we looking for when we're hopping into the market? Hopping into the market looking for a valid 5 minute structure. All right, so we had that pre-market, which is nice. Another thing I didn't really notice, which is also why like I kind of got into the markets a little later today, which was probably another problem. I only had like 5 to 10 minutes to really do analysis. But we had this 5 minute SMT between NQ and ES. Right here, pre-market, around the pre-market consolidation or accumulation, whatever you want to call it. So I marked that out, 5 minute, right? That we can see we manipulated higher. We didn't essentially take out a key level, which is something that I'm going to back test. Like whether we're supposed to take out a key level or not when we're looking for our manipulation leg. And on my initial variant of my model, yes, we are. But on the continuation variant, it's like we can, but we also can't. So is a 5 minute inversion here, us filling this 5 minute gap, technically us like equivalent to taking out a key level. So we clear the inversion of this. It's about, let's mark up the GAN box with it. It's about nearly like 75% through. Yeah, just about touches that 75% mark. Definitely consider that inversion. Typically over like the 50% mark of that box is like a clear inversion. So we could tap into it again, but we're not going to inverse it again. So that's another reason why like longs probably wouldn't be the solution today. Like we had this high up here, but which is also something I learned today, is like we already took out this high on YM, which is a US 30. I know like some people don't know, like to look at the US 30, but I'm going to start doing this with my data news. So we see data news 830, 830 PPI. We had that candle, but we already took that out. So we're not really looking to take that out again on the NASDAQ and ES, especially when we're trending so much lower. So, and we were staying below this high on ES and NQ. So we more likely weren't going to take out that high today. So that's another reason why like longs probably just wasn't the scenario for today. It probably just wasn't the best play, and clearly that happened. So let's get more into this though. So we had the SMT, right? And then we weren't going to retest this 5-minute gap, so there's no point in me targeting this high like I was saying, because we weren't going to have a double inversion. That's just not a thing. You can't inverse a fair value gap twice. But you can retrace. You can inverse and then retrace, which is what we did. So which is also like the IRA that presented itself today. We had 5-minute IRA when we had that entry point. If you can see here, we have a fair value gap, inversed, retrace off the other 5-minute gap. So that was also something to notice too. All right, so boom, we got our structure, SMT lower, manipulation higher. All right, now we're coming lower for that distribution move. And then as we're coming lower, we don't have a valid entry point, so I can consider this a continuation variant of my play. I'm looking at this low here, the low of our accumulation zone. Can we sweep that out? Did we displace from it? All right, now that I've seen that we displaced from it, I can consider this valid continuation variant of, what I'm trading. So we see a continuation variant, displacement. Now we're looking for a retracement into some sort of continuation confluence. But right now you can see we displaced around like 840, 845. All right, we're not really trading till post market open. So right here, we can see where we're tracing. We don't fully retrace into this 5-minute confluence. Remember, if we have 5-minute structure, we're looking for a 5-minute confluence as well to retrace back into. So I got my 5-minute confluence right here. We didn't yet tap it right here. We did tap it right here, but look, that's where people go wrong. We tapped it pre-market, right? And that was just a retracement, right? Which we do twice actually. So you see it tapped it, retraced into 5-minute fair value gap. Boom. We didn't go into it this time, come back lower. And all during this, by the way, we're forming more structure. So keep that in mind for later. And then boom, 925. This is where people will get mixed up. 925, we're not entering pre-market. I'm not going to enter pre-market move. So we wait till 930, because if we keep retracing it, most likely we can just think to ourselves that presumptuously, if we know we're not supposed to go in pre-market, we're going to wait for another test of this continuation confluence post-market. That's when we go into the 2-minute time frame, and now we're able to see that boom, come pre-market, when we retrace into this 5-minute order block, it was 926. All right, pre-market, and then we come lower. Now market opens 930. That's when we come lower, make this new low of the accumulation zone, right? Which I thought it was a manipulation leg, but it's not, because see, this is like where I really got tripped up. So we had our key level, we swept that, right? And now I'm thinking we're gonna go higher, but that's when I had to look into this gap right here. We already inversed the gap, so we're not gonna inverse it again. So therefore, yes, this is considered a manipulation move. We took a key level, we're pushing lower, and then we push higher. We took out our initial draws, but we're not going to go for anything more because we cannot inverse this gap again. We cannot have a double inversion, only retracement. So now market opens 930. Now we can see here that at 934 we have IRA. What is IRA again? Inverse retrace action, or inverse retrace action. Yeah. So inversed this 5-minute gap. Go back to the 5-minute. We can see that we have a 5-minute gap right here, 5-minute gap right here. We know we're not going to have a double inversion, so we look for a retracement from that. So that gap that we have here, that we were just retracing into, the first gap, we now inverse. Now the second gap, since we're not going to have an inversion, we can assume that we're going to retrace. So boom, you see that our retracement, enter in, because now we have our official retracement into our continuation confluence from this initial structure that we had on the 5-minute, followed by the SMT manipulation, yada yada yada. And now we come to our entry point. We can drop down on a time frame, see that we have continuation confluence, IRA playing out. We could probably put just mark out the 50 point of this first gap, stops above that 50 point, because we already know we're not going to take out this high. All right, or if you want it to be safe, just stops at this SMT. And now what are we looking for? Where are our draws on liquidity? We have this low right here for 1. That's good. Well, technically, no, we already took out that low, so I'm just going to delete that. We already took out that low. So we have this new low, newfound low right here for 1. Boom, we take that out. And then take profit 2. We got to zoom out a little, but we see we have a low right here. January 8th, 9:30 low. And then that's right there. It's like almost 7 RR. We can also see here, like thinking back to that structure I was talking about, we have structure right here. We have structure in the market on the 5-minute. I can go back on the 5-minute. You can see that we have valid buy side, valid sell side. All right, we push higher. Where are we pushing higher into? The IRA. That IRA, remember what I said earlier? If we fill a gap on CV, then that is considered a key level being taken out. We are filling a price point. We are filling more orders for us to then shoot in the other direction of the market. So we fill that 5-minute gap. We retrace from it. We have 5-minute IRA. We know that. And now we're pushing lower. As we're pushing lower, what do we form? 5-minute gap right here. 5-minute gap. So this was like our second play. So 5-minute gap, we see it was formed with this blue candlestick right here. Now we can drop down to 2-minute to get more of a precision entry. We see that we have a 2-minute within the 5-minute gap. So we're gonna look for possible entry just off of that 2-minute. Because we had the 5-minute gap, yes. And I'm gonna delete this, the first position, so we don't get confused. So I'm gonna mark out that 5-minute gap. You can see we didn't quite retrace into it, but then you see on the 2-minute that we also have a gap right next to it. So we can kind of just like look at both of them and enter it off of that 2-minute, because that 2-minute draws us a little lower. So we can see we have the 2-minute. We can mark up our 50 point of the entry confluence. See, we're nearing there, but we also have that room because we have that 5-minute gap. So 5-minute gap basically retraced into, but it's a 2-minute gap. So we're retracing into a 2-minute gap. Entry off of that. Stops above at the inversion of the gap. Take it down to that low. So that would have been our second entry. Or like if you missed the first entry. Another 7 RR trade. So as you can see here, there's 2 very good trades today. And this is why reanalysis is so important. Just going over what you did wrong for the day. Yeah, it's all very important. But let me back it up for you guys so you can see the full picture. Yeah, and that would have been the day. That would have been the day. As you can see here, we also formed more structure later in the day, but at that point, it's 10 a.m. That's we hit second take profit, like, and then we had a reversal. So that's the day. That's everything that happened, and like probably our more volatile trades for the day. Could have definitely caught the same continuation play from this inversion when we inverse this gap to get even lower. But at that point, it's just like, you know, you already took 2 trades. Call it a day. Don't be greedy. So those were the ideal plays for today. the key, I'd say key takeaway from today is that, we gotta really look at what we're supposed to be looking for and not really looking at what's happening, not reacting but observing, and then we could possibly see these plays more, and also just getting into market earlier too, for sure. But I think just charting up these plays, understanding where you went wrong, that's important, and that's what I really want to show to you guys today. That the importance of charting out your trades, or win or loss, going through every possible scenario under your model that attests to you taking a trade. So that's just a takeaway for today. Do your post market analysis. Spend hours on a loss. It doesn't matter. I took that trade 9:40. It's 12:30. I've still been, now like doing an analysis on my trade. So just a couple hours, bro. It's not that much. And now tomorrow I'll be even more locked and loaded. This is like back testing the play that just happened, which is the most important thing you can possibly do. So yeah, I'm gonna post this probably raw, because if you want the knowledge, you'll find it, and you'll get through my rants, but like still be able to understand like the true value that I'm giving out to you guys. Because like if you do listen, I know sometimes I do over explain, but you do tend to find out like that this is true value, and if you're taking notes, then it should be a-okay. But yeah, hopefully you have a great rest of your day, and if you watch this whole 17-minute video, comment 50K. Yeah, actually no, comment like, I don't know, comment something like you learned from this video, and then I'll see it, and then I'll enter you into 50K funded account giveaway.